I'm very glad to offer the glass half full story following Professor Pettis. Before I start, I'd like to say thank you very much for the organizers to invite me. Indeed, I'm not associated with Columbia. I went to NYU, somewhere down the street. But they had fond memories of spending many weekend mornings in the East Asia Library. And where also I found some important information for my dissertation. So thank you. Today, I'm going to talk about, from an economics point of view, how China is weathering the crisis. I just have, like to say 3 points. Can you please, oh, sorry. Just 3 points. First is that the growth will slow very significantly in China. China indeed is affected by the global financial crisis, but it's not going to collapse. And I will talk about a few points, which include one assumption that people often make, and I would say it's not necessarily true, that China is not a very export-oriented economy. Second point, China can recover from the global financial crisis ahead of the US, ahead of other major markets that China export to, not necessarily by the private market-based investment or demand. I would agree with Professor Pettis about the adjustment in the US and everywhere else, but the recovery is going to be powered by the stimulus. And the final points, I would agree, but I think also coming from a different angle, that structural change in China indeed will take a long time. As any structural policies, not only one needs to build consensus for the right policies to form, but even when consensus is formed, there's many political groups and interest groups to work through for those policies to be implemented. And even if they're implemented, they will take years to bear fruit. So first point, how export-oriented is China? And most people use export as a share of GDP. However, export is a gross value, and GDP is a value-added terms. It does not matter much for an economy like US or Germany or Japan, where they produce most of the things that they export. In China, more than half of China's exports are actually processing products, which means a huge share, as much as 70 to 80%, is imported. So the value added of those exports is less. So by value added share, China's export dependency in terms of the economic structure is significantly less. It's on par with Japan, obviously much larger than the US, but not as high as some of our East Asia neighbors. This is, of course, the structure. It is true that since 2002, 2003, China's exports have grown very rapidly, and also it had brought with it investment and employment. So in this last economic cycle, the contribution from export growth to the overall GDP growth was much larger than that 20% or 18%. So what it means is that economic structure is not all about exports. Economic cycle, a lot of exports contribution. So with a global slowdown, China is going to be affected very much. However, the structure is not very export-oriented, so you can have room to stimulate. This is very different from Hong Kong, from Singapore, from Taiwan. Secondly, China in the last few years, the very rapid growth was not accompanied by a credit bubble. That is very important because it's very different from US, the UK, many other countries in East Asia, Korea, that had a credit bubble. When we look at this, this is credit, overall credit share of GDP. That means bank lending in the last few years actually grew by less than nominal GDP. So the very rapid growth was not financed by bank lending. But rather, in the last few years, I would argue China deleveraged. If you look at investment, an increase in share between those 2003 and 2007, an increase in share came from retained profit and much less from bank lending. Of course, before that, there was an increase of leveraging. So in the current crisis, China will have to and can afford to re-leverage. It's very different from the world where the world is deleveraging. China, because of the abundance in liquidity and the fact that banks did not lend so much, because corporate and household sector did not borrow so much, you can actually re-leverage in this process. So it's different from the cycles in other parts. Now the second part, so that answers the question of addresses the first point. That's why China will be hurt but not collapse. Secondly, this recovery is coming from the stimulus. This is how the government is talking about a major fiscal stimulus. This actually, I would say, this is the investment stimulus. I agree with Professor Pettis that actually much of the stimulus did not come from fiscal. It comes from bank lending. And China is using credit policy as much as it can, because it can in this environment, to power the stimulus. And China's re-leveraging, as we can see, even if new bank lending this year it reaches the lower limit, which is what I'm forecasting. As I said, I'm an optimist. I trust that government has foresight to rein in runaway banking credit. Still, in that environment, we see bank lending as a share of GDP rise by about 15 percentage points. That's a huge, major re-leveraging of the economy. And without proper control, of course, it can go up even higher. So what is the benefits and cost of that? The benefits, of course, is that it enables China in this environment to actually increase lending and keep the economy from falling apart. In the short term, it also provides necessary credit so that the companies do not go bankrupt, and therefore their current loan books do not turn bad. In the US, you have the financial system running into trouble, choking the real economy. In China, the real economy is hurt by falling export demand, and financial system is trying to help. So it's opposite. But of course, the current bank lending is unsustainable, and there are a lot of risks associated with it. Because the reality is that part of the demand for China's products, the export demand, is weak, and also that affects employment in the export sector, therefore domestic consumption as well. So the reality is that the demand is not very strong in the real economy. It's not a matter of fact that if you pump enough liquidity, the economy will just grow as fast as you want. That's not true. So therefore, in this environment, excess liquidity could lead to asset bubbles and possibly in the longer term, some inflation, and certainly could jeopardize the health of the banking system in the long run. But in the short run, of course, in the next couple of years, banks are expanding their balance sheet, and we're not going to see a major problem anytime soon. Coming to consumption, the third point, how do we stimulate consumption? That is, I believe, the largest imbalance in China. The largest imbalance is an overdependence on investment, which result into producing more than consumption, and therefore the export surplus is actually a byproduct of that. One thing that many people, I'm just going to pick up a couple points. One thing that many people in China actually has criticized the government in terms of the stimulus is saying that, what happened to tax cuts? In the US, the stimulus have tax cuts and trying to stimulate consumption, right? In China, it's all about stimulating investment. I just wanted to point out one thing. Since the early 90s, when personal income tax was introduced in China, it has grown very rapidly to just 1% of GDP. So if nobody pays personal income tax in China, that's 1% of GDP. One can see that there's very little room from tax cuts That's just one thing, because a very small share of population actually pays personal income tax. Here, I don't have time to go into the problems of the tax system, but that's just the current fact. Okay? What happened with, why is China's consumption relatively weak? I say relative because China's consumption actually has been growing very rapidly, faster than most places in the world. In real terms, it has been growing 8 to 9% a year, right? It's just that it's growing less than investment, less than GDP. That's why, as the share of GDP is been declining. And many people has this understanding that China consumes not so much because Chinese people like to save. Okay, that may be true, or that China's social safety net is not so good. Okay, those I do not want to argue against because those are partly true. But the biggest reason is actually household income as a share of GDP has declined. It's because households do not have enough income to consume in the general macro level, not about people who have money or not. Okay, and the biggest reason is that corporate saving has increased tremendously in the last few years, and household saving has stayed more or less the same. And this, of course, is related to the fact China's growth has been very focused on investment, on industry. Industry needs a lot of investment for physical capital to be built up. And since the production is very much capital intensive, that means the returns to that growth goes to capital instead of labor. So it doesn't employ a lot of people. That's why non-farming employment has been growing very slowly in China compared to the past, but also compared to the period when Japan and Korea experienced the takeoff. So this is because of heavy industry and investment. And just a corollary to this is that actually in the last few years, heavy industry, the steel, the petrochemicals, and so on, has just increased tremendously. That exaggerated this tendency. Just 1 minute about the final policy is that to change that pattern, we need structural changes to reduce household saving, establish the social safety net. Healthcare reform is a key policy that the government has embarked on, although I would say right now the steps are still relatively modest. Secondly, reduce corporate saving, which means change the relative prices of factors such as energy, resources, capital. Okay? And finally, to redistribute that corporate earnings. Chinese companies, the SOEs, do not pay dividend. If they pay dividend, that can be used for building out the social security system. These policies all would take time and also take political support from different interest groups, and therefore they take time. However, this is again just the final point, my glass half full story. Chinese word crisis is 危机. 危机 means danger and opportunity. So when there's a crisis, it's the right opportunity to embark on structural reforms. And I do think China will make a successful transition, even though it will take much more than a couple of years. Thank you.